Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, March 7th, 2023. It's now the 6th. We start off in the S&P 500 daily chart in DeMark, looking back to December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 3 count. And to negate that, for end of day on the 7th, for the price flip to the buy setup count 1, there must be a close under 3951.39. The D wave, down wave 2, and D wave up wave B has printed. Now it needs to tick higher than this high from the 2nd, and if it does that, the 5 will shift over and the C and 2 will turn into a 0 for downwave. And price poked its nose above the baseline, which was at 4061.80, and had a close of 4048.42. And the conversion line bumped up. It's at 4003.33. The levels in danger of being qualified for end of day on the 7th would be the trend factor down 2 and the sell TDST. Close below the sell TDST and both of them become qualified, somehow wedge itself in between the two and close under the trend factor down 2, then just that level becomes qualified, and the D wave down wave 3 and D wave up wave C will print on a tick lower intraday, lower than this low on the 2nd. So the D wave is on the D wave down wave 3 and the D wave up wave C. I've zoomed in to see that this ongoing supply line, which is at 4097.34 for Tuesday, will become qualified with a close above that level. And if things get ugly on Capitol Hill with Powell testifying, a close below this demand line will become qualified. The CBOE total put call ratio charts inverted KST of the put call ratio shows it still not decisively rolling over to the downside, even though there's been upside for the S&P 500 and it's fast approaching this blue line. I still say it's got to at least make it here and a little above before it rolls over. And Mr. 2% Chair Powell is testifying before the Senate for today, 10 a.m. Eastern Time, and then tomorrow it's Mr. 2% talking to the House and testifying there again at 10 a.m. Eastern Time. I think it's becoming a little clearer to me why the markets and stocks in particular have been going up, knowing that the threat of this testifying from Powell will be his hawkish stance. So Powell and his other cohorts on the FOMC are sticking to that 2% target for inflation to come down to, only because they have to. They're committed to the 2% that they've been talking about, even though more realistically the whole world is pretty much saying we'll be lucky to get down to 3 and no further down. So 3 to 4% inflation will be living with for a long time probably. And here in the DeMark weekly chart for the S&P 500, you can see the 100% disqualified exhaustion up at 6118.34, and that started right around that big October run down here, which was probably the bottom. Could be a revisit, but more than likely the bottom. So if Powell and company cannot just come out and say, well, we're just going to raise our inflation expectation up to 3, possibly 4, and we'll have to live with that, in which case the market participants would go nuts now to the upside. It's inevitable that they're going to have to come to the stark realization that they're not going to meet their 2% goal without killing the world's economy. And if the theory proves out that they're going to have to eventually capitulate to 3% or so, that means the S&P 500 will go to 6,000 and beyond, and not taking 10, 20 years, probably in a couple of years it will get up there, maybe even less time, as valuations of stocks will have to skyrocket. So I complain about the big fat cap megatechs valuations now. We possibly haven't seen anything yet. The S&P 500 support and resistance levels big board chart shows the gray areas at the 20 simple moving average, daily baseline, and the pivot point. Price in the pre-market hours at 6:08 a.m. on the 7th for the S&P 500 is 40.54. So to the immediate downside is the weekly 65 simple moving average, 21 EMA, the downtrend line from 0603 2021 S2 and S1. And to the upside is trend factor down 1, the top of the gap zone 2, the daily horizontal support from 0407 2021 R1, R2, and the daily ongoing supply line. And to the downside is this weekly conversion line, along with these others in the 40-30 range here. S&P 500 AD line for the daily chart is under its 21 EMA signal line slightly, but the NASDAQ 100 daily AD line is above its 21 EMA signal line slightly. And the ROC 1 is right smack in the middle of the green zone, 0.07, it pointed down. ATR2 at 46.17 made it back into its green zone, and the PPO extreme is above zero at 1.18%. So we're talking about the volatility regime really simmering down here, at least for a day. And the New York traditional McClellan breath oscillator to get back to zero would require 1,214 advancers over decliners to get back to zero. Have a great day.